morning, guys. It is Tuesday, March 5th, 2024. I got the coffee, I got the news, and you know I'm going to talk about gold first. So, the trend that we talked about yesterday is continuing. This is kind of scary. So, gold is currently at 2136. It hit 2150. This is pretty profound. Gold is just rocketing up and up and up. I don't think 2200 is outside of the realm of possibility, probably within the next 24 hours, potentially. If those that don't watch my channel regularly, I'm not a buy gold guy, even though you can. I just don't use it as an investment myself. But what I do use it for is an indicator. It is a powerful indicator of what's going on in the economy. And that is a scary number. If gold is above 2,000, something unusual is happening. Now, as I talked about yesterday, it hit a new baseline, it seemed, of $2,040 early last year, and that kind of became the new floor. It never dropped really below that. But you can attribute that to inflation just finally setting into the gold price market. But this new rocketing up, these new prices are coming as a result of anticipated rate cuts. And if gold is a reserve, which it is, and just the anticipation of rate cuts is doing this, I would expect there to be rampant inflation if Jerome Powell cut. I really don't think he should. I don't think the indicators are there. I think the economy would run too hot and we would be back into a bigger problem than we were when we started. You know that I am an interest rate hawk. I want interest rates high all the time, so you could definitely say I'm biased. But I think these numbers are just unmistakably a bad sign. I don't know how you could argue anything else. The gold has never been at these historic highs unless there's major instability in the market. The last time it's been this high was in the middle of lockdown during COVID, when the entire country was locked down. I'm talking about that April 2020. And then the financial crisis of 2008. Those are the only times that gold was this high. So that should tell you something. We'll see what happens. The next Fed meeting isn't until the end of the month on the 19th and the 20th. Jerome Powell is said to testify before Congress tomorrow, but that's just, a grilling. It's not actually policy setting. So we'll see what happens. But as always, I am a strong supporter of high interest rates. We will see what happens. Let's move on to the next story. So, retail. I'm going to talk about Target because I think their earnings call is very similar to what a lot of retailers have been talking about. They had a really strong holiday quarter, but they expect poor sales for 2024. So, Target reported earnings per share of $2.98 versus the expected of $2.42 per share. Revenue rose to $31.92 billion versus $31.83 billion expected. So they had a very strong quarter. However, Target has had a decrease in their overall revenue per quarter going back for 3 quarters. So while a lot of retailers are reporting that they're probably going to expect a bad year for 2024, the only one I truly believe is Target. So just to give you this quote, this is from CNBC. So Target expects comparable sales to drop between 3 and 5% of earnings per share, within a range of $1.70 to $2.10. The company said it expects full year 2024 comparable sales to be flat at about 2%. So essentially, they're not going to see any real decrease in sales, but they're not going to see any real increase in sales either. They're essentially trying to maintain with inflation rates. So earnings for the year for about 2%. I do believe it with Target in this scenario because I think they have had negative pressure on them for a little bit of time now. Even though they've had good quarters here and there, I don't think that it's going to change much for 2024. The next major story is going to be about Apple. So Apple, we've reported on before, is facing major competition in China. Last time I reported it to you, it was about Huawei and Xiaomi. That was the other company. But now there's 2 more entrants I didn't talk about last time. It's Oppo and Vivo. So Apple shares have plunged 24% in 2024. So this is just the first 6 weeks of 2024, and their sales are down another 24%. And this is in addition to the drops they had in 2023. So Apple is really plummeting in China. It is not a good market. And when you consider what a big chunk of the sales come from China, this is very bad for Apple. We'll wait to see what actually comes of this, what they're going to do. But as we know, we've already seen price cuts from Apple. Apple is doing discounting in China, which is something that's unheard of for Apple, even here in the United States. Even Black Friday, they give you like, hey, here's a free charger. Congratulations, it's Black Friday. So the fact that they're looking to do actual deep discounting in China is a major story. Next thing is just this is getting a little bit political, which I don't normally like to do, but I think this illustrates some powerful points about how our economy operates versus how China's economy operates. So the first thing I'm going to talk about is credit cards. So the Consumer Financial Protection Bureau has unveiled a new rule on Tuesday that said it would cap late fees at about $8 per incident. That's good. I got nothing against that. That's a great move. The next major story, though, which I feel ties into this because of the trend of governments trying to improve our lives, we'll say. Biden is going to launch an FTC and DOJ joint task force to crack down on unfair and illegal pricing. So this is his shrinkflation inflation task force, and I think this is just optics and PR. I don't even know how you would go about controlling prices. I mean, it's a ridiculous thing to say because prices are not set by the federal government. So I don't know how he would do anything other than just scold people in the public market. One thing they could do is try to control spending, being the federal government, especially when our interest rates are 5%. Let's not forget that government debt is taxed at those same rates. So debt has never been more expensive. Our current Our current debt is at $35 trillion, and it's adding $1 trillion every 100 days. So I talk a lot about how high interest rates drive down inflation because they cut spending, right, in the market. One thing that it's also supposed to do is cut spending in the public sector. So the government should be taking note, but it doesn't matter if it's a Republican or a Democrat in Congress. Spending is going to go up. I don't think this is a Democrat or Republican issue. It's the uniparty. Both sides do the exact same thing. It's just what they fund. The Republicans will come in and the debt doesn't shrink, deficit doesn't shrink, spending keeps up. It's just different projects that get funded. Let's not forget that we were at war for 20 years between Iraq and Afghanistan. The wars ended and our defense spending went up. I don't know how you explain that. I don't know how you can end a war and get it being more expensive than when you were in it. But yes, we ended the war and our cost of defense and military service has gone up. So that's that. Now here's the opposite side of the coin. China had their annual parliamentary meeting yesterday, and China has set a new GDP goal. So China has set a GDP goal of 5%. That they're saying will not be easy to hit, but that they will probably hit by the end of the year. Now, I know you could say, well, can we really trust the data coming out of China? We can't. But what I think is the difference is their government sets goal projections. Our government will scold cereal bars for having their prices 5 cents too high. That's the difference. That's why we're not winning this. China is actually focused on real growth and innovation, and our government is focused on optics. That's the difference. We're not a serious people when it comes to government. I guess you could say when it comes to everything. But that's why I think it's funny when guys like Peter Zion say that China's best days are behind him, when China's crushing it in semiconductors, they're crushing it in cell phones, 5G, solar panels, electric cars in literally every capacity, not to mention their infrastructure plans outside of the country are just creating nothing but good forces in the world. Whereas us, we can't build roads in our own country. So before somebody says China's best days are behind them, I think they should really look at the data. By the way, I even a couple weeks ago reported that China's GDP is plummeting. Because we beat them in GDP growth for 2023. What I didn't realize, and what I have to correct, is that actually came into projections of what China had set for the year. Now, again, we could not believe them. It could be fake data. But again, they're coming in at the goals they're setting for the economy. We don't set goals for our economy. We just try to control optics. I mean, I don't know what we do with the economy. We don't have the federal government or any branch, any treasury department, any financial market, any part of our infrastructure set goals for growth. That just doesn't happen in the U.S. Now, I know it's because our economies are different, but this is why it's very hard to compete when you have a government that's focused on enriching the people versus a government that's focused on robbing the people. If you didn't understand that, our economy is based on robbing the individual. That's what I believe. In addition, China has also set a deficit to GDP ratio of 3%. So in other words, they're actually trying to control their debt, unlike us, where our debt keeps growing by $1 trillion every 100 days. So that's it. That's my rant. I hope you guys have a good day, a productive day. I will see you tomorrow morning.